Welcome to Market Peeker. Pivot points are a popular tool for identifying key levels of support and resistance in trading. Let's break down what they are and how to use them effectively. What are pivot points? Pivot points are calculated levels based on the previous day's high, low, and close prices. They help traders predict potential turning points in the market. Key levels in pivot points. Pivot point, PP, the central level, acting as a potential reversal point. Support levels, S1, S2, S3. Below the pivot point, these indicate areas where the price may bounce back. Resistance levels, R1, R2, R3. Above the pivot point, these show where the price may face selling pressure. How to use pivot points. Breakouts. If the price breaks above resistance or below support, it may signal a strong trend. Range trading. Use support and resistance levels to identify entry and exit points in a sideways market. Pro tip: combine pivot points with indicators like RSI or moving averages for better confirmation.